Welcome to Power Charting. I am your host, Bruce Frazier. This is a very special Power Charting. It's a workshop. We are going to focus on point and figure construction. Point and figure construction will often be used in Wyckoff to do horizontal point and figure counting. Today and in part 2, which we will record next week, is going to be simply about, but very importantly about, how to construct point and figure charts for your personal use as you are evaluating stocks. And you will see in point and figure that there are aspects of charts, of indexes, of stocks that are illuminated in point and figure that might be obscured by vertical bar charts. I love point and figure. I've been doing it for 40 years. In the early days, you can see over here on the right, this is a hand-drawn point and figure chart. Makes me very happy because I used to do all my point and figure charts by hand, because 40 years ago, I did not have, nor could I afford, a computer. I'm not even sure that software was available then to do point and figure, but I had huge stacks of point and figure paper, and I would every day go through those stacks, and I would update the charts off of the evening newspaper with the day's stock quotes. And so I would see all these stocks every day, and you could post them very quickly. Now, with the stock charts point figure engine, we can go into these point figure charts without actually drawing or constructing them. And so consider the beautiful stock charts approach to point and figure. That's what we will work on today. Go back and read some of my early blogs. This is actually from January 2016, an eon ago. And it is Introduction to Point and Figure Charting Construction. And there are many blogs that I have written on these topics. Now, it's very important that we have comfort with the point and figure engine that we use for developing and creating point and figure charts. We want to use different types of point and figures for different purposes. This particular chart, now we're looking at PayPal right here. Let's see about how we would create a point and figure chart like PayPal. At the top of the screen here in your dashboard, well, let's go to the dashboard. And this is what you'll see first, is your personal dashboard. And I heartily encourage you to get a subscription to Stock Charts so that you can not only make these charts, but you can save them into directories. I have multiple directories for point and figure charts. I create them the way I want them, then I save them, and I can always see them in the format that I choose. Here at the top, you'll see an entry area for putting in symbols. I have this defaulting to a sharp chart, and I use a weekly vertical bar chart with relative strength as my default chart. But today I want to go straight into a point and figure chart. And so we go down, we click on sharp charts, we see point and figure right here. And then let's put in PayPal. And I will get my default point and figure chart, which we will see here in a second, is, and this is save as default. You'll see that you can set up any default chart that you'd like. I have this chart as a 3-box reversal traditional scaling point and figure chart, and we're going to go into details on how to do this. So, and notice that I have this fill the chart duration. I have wide. Let's change this to end date. Notice that, oh, the chart's a lot bigger. You have less data. You see less data, but you see it up closer here. There is a big distributional type structure that is developed in PayPal that we can see readily with the 3-box method. And this is data that goes all the way back. Look at this number 1 right here. This number 1 is January of 2021. So we're looking at data for point and figure analysis of PayPal back to January in this distribution. And then if we look further back, we see the letter or the number 9 over here in the first column on the left. That is the month of September. So we're seeing quite a bit of data for PayPal here in this chart. And there's the year 2021 right there. And that is where this year with the number 1 begins. And we could do a horizontal count. I'm not going to talk about horizontal counting in this workshop, but we will get to that at a later date. Also, look at the big, beautiful base. So we're seeing all these swings up and down. How is point and figure constructed? Point figure is constructed based on volatility and not on time. And so now what does that mean? That's crazy. Well, a regular vertical bar chart, every bar is a period of time. It's either a day, a week, it could be intraday, it could be 30 minutes, it could be a month, it could be a quarter, but you have a plot for every distinct time period. Here, the only thing that can move you from column to column in a point and figure chart is a change in trend. So the period that you spend in a year, say 2020, is going to be a different width than the period that you'll spend in the year 2021, because the volatility characteristics, the volatility signature of that stock will be different. So here we see that in this case, we have 3-box reversal method with traditional scaling. Everything up to $100 is 1-point scaling. Everything below $20 is half-point scaling. This is in the traditional scaling method. Everything over 100 up to 200 is 2-point scaling. Now, you don't have to remember that, because every time you make a chart, you'll see this. It can create complications when you do horizontal counting, because if your count is straddling 2 different scaling areas, 2-point to 4 points, 1 point to 2 points, if it straddles that, it affects the way you calculate. I'm going to show you shortcuts for how you can fix the scaling issue. It's not always an issue. Like here, I'm using standard scaling. Above 200, it goes to 4-point scaling. Not a problem. Everything in this distribution area, with seemingly distribution, I don't know that it is, but it's breaking down right now. Everything in this area is at 4-point scaling. So from the perspective of counting purposes, it's not an issue. Okay, well, let's keep going. So now let's say that we want to save our methodology here. Now let's also change the size of this chart. Let's go down to a 780 size. You can see that it takes up less space. It's smaller on the screen for the purposes of looking at it, but you can also make it just substantially huge, and this is what you get. So your preference, your choice, all based on your equipment. And so in my case, I'm working currently on my super duper laptop. And so being on my laptop, I make this size a little smaller. So in this case, I really like this. I'm going to save this as my default. That means that all these settings that we have here, daily, end of day, duration, high, low, size, traditional scaling, 3-box reversal, are all set. Every chart I ever make, when I put the symbol in, is going to include those scaling characteristics. Now let's talk about the chart engine itself. So chart attributes, this is very important. Make a note of this. Daily, the period you always want to use is daily. If you're making a really long-term chart, use daily. I'll show you how to get more data here in a second. Daily. If you go to intraday, that's a whole different animal. We will talk about intraday charting next time in part 2. By the way, In part 2, we're going to have Johnny scan, and John is going to show us some scanning for point and figure. Also, at the end of this episode, I'm going to do an overtime, and I'm going to talk about the current market environment, get away a little bit from the pure point and figure workshop, and in overtime, I'm going to talk about a very interesting market environment that we are in right at this time. Okay, so daily data, type, high, low. So always use high, low for your type. Color scheme, that's a personal preference. My preference is default because it's just these markings on a white background, easy to see. Okay, end date. This is very interesting. This is very useful. This only works with the duration end date. So today, if we click on today, we can go back in time and we can go into a prior period. Let's go to November 2015 for PayPal. Aha, so there not a lot of data. But look at that, in a nice little base looking structure here, $34 roughly. And so here is 3-box reversal and 2015. So this is very handy. I use it all the time. Okay, so let's now, very easy to get back to today. So we go today and we see this button down here says today. Click on that, takes us back to the current data. And we're back to where we were. Okay, now let's talk about chart scaling. So we're real clear on all this. The only other thing I would tell you is if you do not want the columns of O's to be red, you would click this color column, unclick it, and then everything will be in black and white. Okay, so except you can see the months. You can turn those on and off if you choose to. I really like having them. See right here, hide the months. Chart scaling. Okay, traditional scaling, we just talked about that. There are other scaling methods, most of which we will talk about next week. So percentage scaling, very powerful. We'll talk about that next time. Dynamic ATR, probably have to get to that next time. And then user defined, very useful. So if we want to go to a user defined scaling, because right now everything we're seeing is 2 points above $100 and 4 points above $200. Let's go ahead and put in 1 point scaling. Oh my gosh, look at the difference. Everything over 200, look at all the volatility that we see in 1 point scaling. So this isn't real useful to us. So what if we do this? Let's just make all this 3 point. We can do anything we want. 3 point scaling. So now look at the detail that we get. Each one of these is, the scaling is 3 points and it's 3-box reversal. So we have to have a 3-point move, 3 entries, so 3, 6, 9 points of reversal to get a reversal, to move over a column and start putting entries either down or up. So here we can see that we've gone from up to 276, stopped, then we went 273, 270, 267, and we had to go all the way and touch 267 even to get 3 entries down to reverse the trend downward. And then it just continued. It cascaded lower all the way down to 225. So, and then notice this period of reduced volatility. This is a hinge type structure that reverses back up. This is clearly an area of support as defined by that low. You can see the areas of support and resistance very well in point and figure, a little harder to see in vertical charts. And so that's one of the things I like about them. Also, you can draw trend lines. Look at this beautiful trend line. So we can copy, look, copy the image. You could paste it into PowerPoint, snag it, or Paint, wherever you like to do your work, and you can annotate these charts and save them. That's what I do. I use Snagit a lot for this, and I also use the PowerPoint where I just put it in a PowerPoint page and just start marking it up. So I'll use both of those and find them quite useful. All right, let's turn our attention to other scaling conventions. So we just changed our 3-box reversal, and we're using standard scaling, traditional scaling for our default. So let's fool around with this a little bit. So we're in user defined. Let's go to a 1-box reversal, which convention is, in my thinking. The 3-box reversal is really associated with weekly charts. I sort of think of them in the same way. Weekly data, weekly charts, vertical charts. 3-box reversal is kind of encompasses the same amount of data as a weekly vertical bar chart. Now, that's not altogether true because we just established that you move to the right in the chart based on volatility, not time. So we know that time is not a constant on a point and figure chart. Volatility is a constant. So if we go to 1-box reversal, which we're going to do right now, let's keep the 3-box scaling. Let's update it. You're going to get a different look. Now, what you're seeing here, let's color the columns because it'll be easier to see the ups and the downs, because there's something very important I want to show you about 1-box reversal. And that is that in 1-box reversal, you have to have 2 entries in a column. Even though it's 1-box reversal, you have to have 2 entries in a column to change directions. Now, let me show you what I mean by that. That's a little confusing. It's very difficult. Point and figure was very difficult to teach, we found, when we started teaching the Wyckoff method in graduate school. And one of the things that was hard for students was point and figure. So we spent a lot of time and had them draw lots of charts. And so here, notice as we go over into this area right here, that you can see that there's just a trading range going on in this zone. I'm going to actually blow this up so you can see it better. See that? Now notice 4x is up. So this is 3-point scaling, 237, 240, 243, 246. We have to have 1-box reversal in the opposite direction to change columns and start going down. So we have 246, then we go down to 243 right there. See that? 243. And then from there, we go down to 240. So we get 2 entries. All's good. Then a reversal up to 243 and 246, 2 entries up. Change columns, reverse directions. Now, look what happens. We are in an up column, and then it goes back to 243 right here and stops and reverses up again. Well, our rule is for 1-box is you have to have 2 entries in a column. This is different from any other point and figure charting convention, is the 1-box, because we went down, but if we only have 1 down entry and we reverse back up, we put the second entry in the same column. Consequently, therefore, we see here a decline to 243 and immediately reversal back up to 246. And so we put the X in the same column with an O. Okay. Now, that's just the rule. Why is this the rule? I don't know. But if you don't do it this way, and there's a lot of point and figure engines out there that don't do it correctly. And so they're kind of fixing this, but as time goes on, but this method is really important to counting horizontal point and figure counts, because if you get this wrong, you're going to get bad counts. I've seen many people do it. I've seen Wyckoffians, knowledgeable Wyckoffians, count horizontal structures with 1-box and have the computer not create the proper count, not create the 2 boxes per column, and they get a miscounted structure. So be really careful of that. And so, you know, you'll just have to get used to the practice of this. And, but this is how you get correct point and figure horizontal counts on one box charts. Now notice that it then reverses down and goes down 3 columns. So 243, 240, 237, and then turns up and resumes its uptrend. Look here, up to 261, down to 258, up to 261, 2 entries of different direction in the same column. Minimum thing that has to happen. So these are going to be all over in this chart. So now look at this distribution right here. So look at this beautiful count across here. This is a fantastic distributional type structure across the 294 area. You can count this across. I'm not talking about counting today, but I'm just saying, look at how well you can see this on the point and figure. One box method gives you granularity that really helps you to see what you need to see to be able to take good swing trading counts. And then the decline comes in, and look at this decline goes down to 201. Wow, pretty impressive. So 1 box, 3 box size or scaling, you can go ahead and practice with that, fool around with it. Point and figure is very forgiving. Play with it. You can't break it. Have fun with it. Okay, now also notice this redistribution here. Redistribution, pause, rallies up into overhead resistance, down it goes again. You can see that also well in point and figure, maybe harder to see in a vertical chart. Now let's add another little nuance here that I think is very, very cool. And look at the volume here. We haven't talked about that yet. So volume, we have off or separate. Well, what happens when we click on separate? Remember, you can't break it. So let's fool around with it. I'm going to make this smaller so we can see more. Look at what we have. We have a beautiful set of volume bars that are aligned to the columns of count. And so this really does give us wonderful granularity on volume that maybe is harder to see or gives you a little different message than on a vertical bar chart, because this is all the volume that comes in that set of X's up in that very sharp rally from 240, really 237, up to 261. Look at the volume here that comes in on that move up, which sets up a very important rally upwards to 300. And volume comes in throughout this whole period. And then an interesting thing happens. Look at the volume here. This volume is higher than the volume that precedes it up into this point right here. This volume is coming on a decline off the top. So you can see that right there. So that is such a useful thing. I look at volume all the time on this. Now, look at this column of O's down. This is a really big break in this stock. Look at the volume that comes in. Huge amount of supply. So this stock is for sale after it completes this series of tests here. Volume showed up here, and then it really showed up in this series of declines right here. So this rally does not get back up to the area where the break started and goes into resistance, and then the decline begins again. Volume starts to expand. So the volume is quite useful in point and figure. Some regards, I believe it to be more useful than in a vertical bar chart. So look at the climactic acceleration downward. We can see it so well in this 1 box chart, and the volume that comes in is just massively huge. So this is just a really interesting structure. This is actually up to date, and so that's quite interesting. Okay, so now we have looked at this. We've looked at user defined. Let's go to in the opposite direction. Let's do reversal. We either do 1 box, 3 box, 5 box. Now Let's do 5 box and see what we get. Interesting. Now you have to have 5 entries in the opposite direction to change directions. So this is really gives us a lot of information. Let's see how far back. We're all the way back to 2018. I think of 5 box as being really kind of akin to a monthly chart. So let's change our scaling back to traditional. I think we'll probably even get more data. Let's see. No, we go back to 2020. So here is 5 box reversal. Here we can see the distribution. Here we can see a reaccumulation that's really quite pronounced. 5 box takes away detail, but it gives us more structure. And so that's quite interesting. Now let's just for fun, let's change our look to the NDX. So here's 5 box reversal in the NDX, traditional scaling. So the traditional scaling is 50-point scaling on an index value of around 16,000. Look at this big decline today. Now remember, after we finish here today, I'm going to talk in the overtime segment a little bit about the current market situation. And so this was a pretty good break today, and certainly more than 5 entries down. So that's quite a dramatic decline. And so we will look more at that. The other thing that we can do is we can do what's referred to as modified scaling. So here we did 5 box, and let's finish on this because we're getting close to the end of our time. And we're going to do, let's do the Dow. And I know the Dow is boring for many people, but let's just do that because that's what we used to do modified on a lot. So we're doing 5 box reversal, user defined. And what we would do is we would often do really big scaling conventions. And in the old days, we had to do these by hand. This is 250-point scaling, 35,000 value index. And so here we see that we have 5 box reversal at a minimum and 250-point scaling. So this very large structure here is compacted into a very small period of time, and a lot of detail is lost. Here is a very large accumulation that we've counted in the past. This is the 2020 low. And so you can see all of that so well by adjusting scaling and adjusting the reversal method. So now for fun, let's just go back to 1 box method, 250-point scaling. Here's that area that we just saw on the Dow that was in the 5 box. Notice how much more detail we get, series of higher lows here and a hinge, and then it just rallies up and out. So the decline here doesn't look quite as dramatic as it did in the NASDAQ 100, but we can see a lot of detail in here. And from a horizontal counting perspective, we could actually count this. But for now, we'll just leave it at that. Look at this volume. A lot of volume comes in as it jumps up and out. Needs to stay out now. Look at this big down volume period. These are 250-point increments on the way down. Very large volume supply is present. At this low here, finds support, turns back up. Look how well you can see that. Okay, see you next week, and we'll continue on with this topic.